All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning us in on this Monday, getting everything started for you. Now let's take a look at the markets. That's really what you're really here for, right? Let's take a look at corn. I'll bring up that corn board, and corn looks like this. It's really not moving. It's been about 2 to 3 lower here for the session. September's down 2 1/4 cents to 472 1/4, about 3.5 cents off the lows, and we are 7 cents off the highs-ish, 7.5 cents. So that'll give you an idea where we stand. Dees is down 3 1/4 cents. 484 was last. It just ticked lower there, but 3 cents off the lows and about 8 cents, just a bit off the highs. There you go. That's what corn's doing. We're be off between 2.5 and 3.5 cents per se. Let's take a look at beans, though. They're the ones that have gotten a little bit of wind underneath their wings. And we had a sale, and they were a little bit higher overnight as well. So let's start with the SEP. That's up 14 cents. 13.51 1/4 is last there. 6 cents off the highs. And we've had a 20-cent range over there, right? So 14 cents off of the lows. There you go. No, the new crop, 15 3/4 cents higher there. 13.23 1/4 is last, and that too is about 5 cents off the highs. And we've had a decent range over there by about 20 cents as well. So 5 cents off the high of a 20-cent range. That'll give you an idea about what's happening in beans. How about wheat? This is the one that's kind of taking it on the chin here, folks. SEP's down 19 cents. 607 3/4 is last. That's about 2.5 cents from the lows. And if you really want to know, it's about 27 cents from the highs. How about that? That means we're trading weak, kind of on our heels. Dees down 20 cents. 633 3/4 is last there. Again, that's a 2 cents off the lows. And we've had a 30-cent range, right? So that'll give you an idea. That's weak in Chicago. Let's go to Kansas City and see what's going on there. That's all about 19.5 cents lower across the board. SEP's down 19 cents to 736 3/4, 4 cents off the lows. And again, we've had a 30-cent range, sorry. So that'll give you an idea about where we stand when it comes to the hard red in Kansas City. Dees, that's 19.5 cents lower. Now 19 3/4 cents lower, just ticking easier as we speak. 746 1/4 is last. 3 cents off the lows, right? And again, we've had about a 28-cent range over there. So 3 cents off the lows of a 28-cent range. That pretty much spells it all out for you. Moving over to Minneapolis, and let's take a look at the spring wheat. 19 3/4 cents lower, and that SEP contract to 805 1/4. Again, a penny to a penny 1/4 off the lows. 10 cents off the highs. Dees is down 11 3/4 cents. 818 1/2 is last, a 0.5 cent off the lows, and about 11.5 cents from the highs. Finally, let's get to the cotton market. Look at this. Cotton, that's getting hurt a little bit. 187 points lower. And that Dees contract, 86.02. And we've got March off 174 points to 85.93. Let's get back to our guest analyst who's been so patiently waiting in the wings. Todd Horwitz from Bubba Trading. He's in Las Vegas. All right, Todd. Well, I don't know. We had some data points last week, CPI, PPI, and the everlasting WASD. What are your thoughts after we've seen everything that the government had to give us?
Well, I think that markets look weak, and I think that the reports that we got are false, basically. I mean, you know, I'm reading that the average family is spending about $7 a month more this year than last year. I mean, there's not a lot of good signs out there, and I think one of the other big problems is China trying to accumulate as much farmland as they can, which, I mean, they've been known to suppress prices in certain areas should there be their desire to accumulate. And I don't think that there's a lot of good things that are setting up here for anybody. But overall, the economy, I think, is really weak. I don't care what the stock market says. I don't care what the economists tell us. From my point of view, we're in a very weak scenario right now and almost in a deflationary scenario.
Well, yeah, I mean, and speaking of inflation and deflation, we got PPI and CPI last week, and they both ticked up a little bit, saying that things are getting a little bit more expensive. You said the number that Moody's came out with over the weekend, that's we're spending about $709 more per month on average across the country. That's $8,500 a year, basically. That's not chump change. So yeah, there's going to be some problems. Is that something, real quick, Todd, that could affect some of the prices, like what we're about to talk next, the cattle?
Yeah, of course it could. I mean, look, you're talking about real money from real people that aren't going to be able to spend as much, and you're going to have to find a better way to budget out. I mean, obviously, we're not the federal government. We can't print money on demand and not pay it back.
Well, we'll see. I think they're going to want to try to do that. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horwitz about the livestock after this. All right, welcome back. Let's talk about the other side of that ledger, right? That's going to be the livestock, the proteins, the meats, whatever you want to call them. Four-legged friends, too, right? Some of them are hairy and some of them aren't. Let's take a look and see what we've got going on in live cattle in Chicago. That board's lower, but not by much. We're off between, let's call it between 30 and 40 cents on the day, right? We've got a 37-cent loss in October. 180.95 is last there, and that's about 30 cents off the lows. But we've had just $1.10 range. So small range, small change means there's not a lot going on, right? December's down 30 cents to 185.15. What's going on in the feeders? They've been bullish as of late, but today we're backing off just a tad. September's down $1.27. 250.17 is last. I guess we could say we're about 50 cents off the lows on that one. Well off the highs, so that'll give you an idea. We've had almost, $2. We've had a just over $2 range, $2.50 in September. So that'll give you an idea, too, about what's been happening in feeders. And then finally, let's take a look at lean hogs. We'll get back to our guest analyst. Lean hogs, we've got that October down $2.32. It's the one that's taking it for the team today. And that's about 27 cents from the lows. $79 even in October. And we've got Dees down $2.07 to $72.42. All right, let's bring in Todd Horowitz. He's with Bubba Trading and coming to us from Las Vegas. Todd, thank you very much for sticking around. What are your thoughts here? Is there any more room left to this stuff, or is it starting to fail for you?
I think it's over, Scott. I mean, again, I don't want to think it's disastrously over. I think that, as we start to rebuild a little bit of supply, as we have the bad economic data, we're going to see just a natural pullback. I mean, after all, cattle is near all-time highs, so it's not like it's a major crisis. I think the bigger concern would be in the hog markets, because they didn't really participate much throughout the summer with a lot higher prices. And now we're going into the time of year that prices go down anyways. And we can see they're under a little bit of pressure today. And I think that the money's going to become really tight for the consumer. And I think that's going to be a problem.
You're right. And that's one of those issues. You brought it up in the last half, but $709 is the exact number. That was for Moody's. That the U.S. consumers having to spend elsewhere, which could go to beef and hogs, but it's not going to be. So you're right. As we get to the top of this mountain, we kind of start running out of a little oxygen, right?
Yeah, I think. Look, again, I don't think it's anything to be panicking or nervous about. In the cattle markets, I am a little bit concerned in hogs, but again, there's only so much money to go around,
right? And
you're going to have to discipline yourself of where you want to spend for your family, and that becomes the bigger problem where it's going to go.
All right, appreciate you coming on. Always from Las Vegas, great stuff, super content.
Thanks,
Todd Horowitz, Bubba Trading in Las Vegas.